Welcome back everyone after the coffee break, and especially welcome to Simon and Jonathan. So this is a great thing, for a pilot course. We're perfectly on time after the first half, and I think everyone is now excited to see what insights you will be able to share with us today. So, without further ado, I would like to hand over to Simon and Jonathan, and we look forward to your contribution. Thanks a lot for being here.
Yeah, thank you for having us. Indeed, very happy to share some of the insights from the consulting world. We are working a lot in the space of insurance innovation, building new players, working with insurtechs, but also with incumbents, and see their challenges, try to help them in the space. So would like to share some insights here around these four themes: insurance innovation, ecosystems, data-driven value creation, and incumbent challenges in the space, and would always try to introduce a bit the topic and our perspective from the industry. And I think then Jonathan would share very practical insights with regard to these topics from one of the leaders in the space globally, Ping An. Yeah, I don't know, shall we, Jonathan, do you want to say a few words before we jump into it?
Not really, just it's a pleasure to be represented here on behalf of Ping An and to be part of this session with Simon. And I guess we'll have a bit of a dialogue, and we'd welcome discussion with the broader group later on in the session. But it's a pleasure to be here, and thanks for the invitation.
Absolutely. And indeed, as you said, Jonathan, we would like to have it very interactive. So please, I think after each of the four chapters, jump in and let's also discuss a bit. Yeah, so let's jump right in and start a bit with a helicopter view on insurance innovation, digitization, and data analytics. And we have been using this slide in the past years to show a bit the development of insurance digitization in the past, I would say 10, 20 years. Because I think now we have quite a positive momentum that is also fueled by COVID. But let me go back maybe 10, 15 years when this whole digital insurance innovation, data analytics theme started in the industry. I think there was really a hype. We as McKinsey, we were organizing a forum with digital insurers, or direct insurers as they were called 15 years ago. And everyone was saying, by 2020, everything will be digital. Nobody will go to agents anymore. The insurance industry will see the same pattern as we saw with Amazon and the others in other industries. But then actually what happened is it didn't really take off so fast. So digital disruption was much slower, and the insurance industry was not changing very much. And there was also quite some disappointment. The first wave of attackers didn't really take off. The shift to online channels has not realized at such a high speed, except for a few places like the UK, where I think the majority of the P&C market is now digital, at least digitally distributed. But in most other markets in Europe and continental Europe, this figure of digital distribution is 10, 20%. So the vast majority is still sold by agents, and also the way customers interact with the insurance companies is still very physical and manual. And there is very limited use of data and analytics, except for pricing models maybe. But I think after this hype and the uncertainty and the realism, what we are now seeing is acceleration and impact at scale. So quite some positive momentum. So we see that some of the new players are really getting some momentum. They have high valuations, high expectations, but also now getting some traction. We see that the shift to online is accelerated by COVID. Everyone had to talk even with their agents remotely in the last few years, now 2020, 2021. And this shift is going to stay there. And we also, see that the pure online market has accelerated in the last year. Still, I think the starting point compared to other industries is not so mature, but I think the direction is a good one, and the health indicators are also there. So also the big incumbents are now really investing into transforming their core operations. digitizing, deploying data analytics, hiring data scientists at scale. So this is all happening now in Europe in many places. I think we will hear from Jonathan in a few minutes from a company that has done all this, what many European carriers are doing now years ago, and how they benefit. But this is the overall helicopter view. And when you look into some figures like InsurTech funding, which is a good indicator how much money is going into innovation, and of course also incumbents are investing. But if you just take InsurTech in Europe, you see that actually we are really at a peak level now. So the European InsurTech funding 2021 has already overtaken 2020. We see that a lot of money is going in there. There were a few bigger deals like the WeFox funding, but even if you take those out, 2020 and 2021 are really the peak years. Germany and UK leading here, and lots of money invested that can be spent. At the same time, you see super high valuation levels. So when you look into the big names, Lemonade, Root, and so on, that are now also listed on the stock exchange, you find that they are valued 10, 20 times their premiums. And if you compare this to other insurers, even online insurers like Direct Line that have a multiple of 1 or 1.5, you see that there is a lot of expectation around these new players. And what is also true, I think, is that many of the new players are active across the entire insurance value chain. So these are just a few examples. There are hundreds of them across the entire value chain. This is also new in the whole area of insurance innovation. So it started very much in the first wave with customer access. So many players try to disintermediate the agents, the traditional companies, by building their own brands and going B2C. We saw the big wave of the aggregators in Europe. We see digital brokers. So that is still ongoing, but I think it's much broader now. We see InsurTech and innovative players in pricing, in claims, in operation, in technology. Many core systems that can be chosen from now. All kinds of tools in the sales area, and we also see end-to-end attackers and increasingly white label platforms, so that enable also non-insurers to build their own insurance offerings. So really a big change. I mean, if you drew this picture a few years ago, you would have seen mainly the B2C players focusing on distribution and customer access, less diversity along the value chain. And I think what is interesting is also that the B2C players are even a bit less successful than the B2B or B2B2C players. So they try to enable established players. So they achieve high margins, often very attractive margins, and scale fast. If you take a few examples from the claims space, for example. So really a positive momentum, positive environment. And as I said, I think when you want to look at a company that has started early with digitization, with innovation, it's certainly Ping An. I think Jonathan is the best person here to explain us a bit more what they are doing. So I don't want to explain at this stage, but just give you one number. I mean, when you just look at the number of patents granted over a 4-year period recently, you see that Ping An has 824, while Allianz, AXA, and Zurich combined have 90. So that shows you already a different scale. And yeah, Jonathan, so it would be great to hear from you how you see the space of insurance innovation and what Ping An is doing differently.
Very good. Well, thank you, Simon. And I should just maybe by way of short introduction, explain what my role at Ping An is. I have 2 roles. One is to be the Chief Innovation Officer for the company, and the other is to run something called the Ping An Global Voyager Fund, which is our corporate venture capital fund that invests in digital health and fintech on a global basis. So maybe I can make a couple of comments on the kind of investor interest that Simon alluded to earlier after we've sort of covered some of the Ping An points. And maybe it's helpful just to give the context of Ping An. It's a China-based company. It's the largest insurer in China, with leading positions in life insurance, P&C, health, and pension annuity. But it also has a very wide range of other financial businesses, including Ping An Bank. Ping An Bank's probably not that prominent to folks outside of China, since it's a Shanghai listed company only. But in a given quarter, Ping An Bank is now doing more credit card volume, that is purchase volume, than American Express does globally with consumers, or that Citigroup does globally. So it's quite a sizable entity. But we also have a range of other technology and health businesses that have grown mostly over the last decade or so. It's an entrepreneur founded and run company. So Peter Ma created the company back in 1988 and has really built it every step of the way. And I guess that, you can think of the growth of the company as sort of building out the financial platform. Obviously, the insurance businesses and the bank are the biggest pieces of that. And then probably in the early 2000s, trying to take more of a customer perspective rather than a kind of product perspective, and moving to this kind of more integrated way of thinking about customers. So Ping An was one of the very early companies in China to look at basically create databases that integrate or aggregate all of the interactions that the company has and all of the relationships that the company has with a customer. The company integrated all of its call centers into a kind of totally centralized unit at that time, and also introduced customer level NPS, which has been a very important kind of set of metrics for the company over the last couple of decades. So we moved from sort of building out the product platforms to more of a customer-oriented and service-oriented focus. And then from probably the end of the first decade of the 2000s, moved into kind of what we've tried to become as a technology-first company. And that meant, firstly, taking everything we do and moving it to the cloud, which allowed us to, in some ways, simplify and standardize our technology platform, move everything to, I guess, what we call commodity processing. But it also allowed us to start embracing a whole bunch of different approaches for both digitizing, but also transforming a lot of our existing operations. And good examples of that would be, for example, using visual AI to do automated claims assessment for the auto business. So if you just take out your mobile phone, we have an app that will allow you to assess superficial damage to a car, for example, and allow us to automatically identify whether the part needs to be replaced or whether the part can be fixed, and whatever the case, what the cost of parts and labor would be depending on where you are in China. So we insure about 55 million cars. I think it makes us the largest car insurer in the world. So as you can imagine, we have a lot of claims, about 15 million a year. So if you can apply a technology like that to about 70% of our claims, which we do in one way or another, that's not to say that every single one of those claims is automated end to end, but we're able to use the technology to add value in about 70% of cases in some shape or form. That's a big deal. It's a big deal for customer service. It's a big deal for cost, and it's a big deal for kind of risk management and cost of claims. Equally, we're still, to Simon's point, there are most insurance markets in the world, especially on the life side, have not found it easy to transition to purely digital sales. And that's because life insurance products tend to be more complicated than is easy to kind of package into a mobile screen or a PC screen. And usually there's a fairly intensive relationship building and consultative elements in the sales process for life insurance. And whatever the case is, we still find life insurance agents to be very productive and very profitable. So there's no particular reason for us not to continue to leverage the strength that we have in that area. What we have done is built a pretty broad digital platform that supports all of the non-customer interaction elements of the sales process, in fact, of the entire process of supporting the agency force. So whether it's recruiting agents, training agents, onboarding customers, whether it's using analytics to vector messaging to the prospects and customers that each agent has in their defined network. We've got these content engines that will shape the content for each different segment of customers according to their profiles, and learning engines that will decide on, whether the customers like that message, whether it was a useful message, whether they want more information, or whether they want to actually talk to the agent, whether that leads to a product sale. So we have a lot of analytics that support all of that. So what we've done is really taken our legacy distribution infrastructure, the agency force, and we've enhanced it through a digital platform. So there are many, many examples of using automation in interesting ways. We have a personal lending business. It used to be it's a non-bank personal lending business. Probably you'd call it a near prime lending business. It's pretty good quality credit, but not bank quality. And we used to have 900 branches. We now have 0 branches, and we completely digitized that business end to end. A very important part of digitizing it was being able to identify customers remotely without them having to be physically seen or show us their ID. That got us into, at the time, this is now 5-6 years ago, into facial recognition. So we had to acquire the AI skills to do that. And that got us into visual AI more generally. But we were able to figure out how to identify people against their selfie versus the reference image that the government has for the national ID system, which the government makes available via our API in China to anyone that wants to use it. There are many, many examples where we've been able to really achieve, ranging from incremental improvements to really fundamental transformations across the business. And then I think a third thing, so the first is moving to the cloud, second is sort of really applying technology to our existing business. The third is there are many cases where new models are really quite difficult to fit within an existing organization structure or an existing business model. And it's proven to be better to launch those as standalone businesses. So Ping An has become pretty adept at creating new generation businesses. And we have a specific way of doing that as well, which is, we try to really simulate exactly the conditions of a startup company. And we try and get capital from third parties pretty early on. We try and make sure that the principals in the company have meaningful equity stakes. We run things very, very close to the bone in terms of cost. So there are no offices, there are no suits, there's no one flying business class or first class, all of that kind of stuff that would be the case if you were a startup. And we've been able to achieve good results. So we've created platforms like Good Doctor, which is the largest telemedicine platform in the world, One Connect, which is our corporate enterprise platform. So we take a lot of the innovations we've built for us and for our customers and make them available to other financial institutions. I guess also notably a company called Lufax, which is one of the larger wealth management and personal lending platforms in China. In fact, that business incorporates the current form of the legacy branch-based lending business I described earlier. So that gives you a little bit of a flavor. I think we're one of the very few companies in the world in the financial industry that's been able to transition to the cloud, that's been able to really radically re-engineer and overhaul its legacy processes using technology creatively. And I think we're genuinely one of the very few companies that's able to repeatedly create new businesses at scale using new business models. And so there's some of the things that make Ping An, I think, a unique company. If I can maybe switch to the kind of funding environment right now. So we're somewhat active, as I mentioned, as an investor globally. And the reason we are is that we want to make sure that we're not inward looking, that we're constantly looking out, and we're cognizant of what's going on around the world in business model technology and platform innovation in the financial sector, but also in the health sector. And we certainly focus on the insurtech market, and we've been somewhat surprised by the ease with which insurtech companies have been able to attract capital and certainly very significant valuations. And as Simon mentioned, you've got these companies like Lemonade and Root that are trading on, very generous multiples of premiums, not just revenue, but premiums. And some of those things don't make too much sense to us. And I guess you've seen the stocks of those companies be very volatile. I think Root has been a pretty disappointing experience, and Lemonade sort of spiked and then it's sort of got back pretty much to where they went public a year and a bit back. But it's certainly a very interesting landscape right now. There's abundant capital, but we're very, very early in the transformation of insurance through the application of InsurTech. And so I think there are quite significant opportunities ahead of us, outside of the framework of traditional insurance companies within this space. So I think for investors that are focused on the substance and have a very clear view as to how technology can be brought to bear and how models can be transformative in the insurance sector, I think there are going to be quite interesting opportunities. In fact, we've just funded one such opportunity in the US just this week in the life insurance space. So let me hand it back to you there, Simon.
Yeah, very impressive, Jonathan. There are a couple of questions coming up also, and one is also one thing I wanted to discuss. You mentioned that Ping An is investing into new businesses, into real innovations from scratch, you could say, not related too much to the core business, but you also mentioned that you're digitizing the agents, branches, and transforming the core business. So, what is, could you say how the focus of Ping An is split there? We see here these 100,000 tech people, 30,000 R&D people. So how do they spend their time? Is it mainly to work on the core, so the core insurance and banking investment activities, or is it more related to innovating, finding completely new business ideas?
It's all of the above. So clearly the existing businesses are extremely important to us, and making sure that those businesses are properly supported. And it's great to have innovative ideas and breakthrough ideas, but today's revenues come from today's business, and it's extremely important that today's business is well run, and it doesn't get ahead of itself or ignore the fundamentals that have made it successful. So keeping that balance is extremely important. We're of course in a changing market environment as well. Two things going on right now is that we're seeing the life insurance market transform, and it's shifting into a much more value proposition and segment focused game, as opposed to having highly standardized products and selling them to the mass market. So it's one of those classic shifts in market evolution. And I think all players are grappling with how to be successful in this next phase of competition. And so technology is going to be part of the answer to that, but a lot of it is just running a business well and thinking through your customer value propositions and making sure you're competitive and making sure your sales force is up to the task of the new challenge. So there's a lot of traditional management that's involved alongside applying R&D and developing technology. Another example might be in the auto insurance market, as have many markets in the world. The China auto insurance market is going through a process of tariff deregulation as we speak. So that's bringing a whole new game. So risk selection and pricing analytics become fundamental. Revenue is certainly under pressure at the top line, but at the margin line, there are enormous opportunities. So, some of those things have to do with technology. Clearly, pricing analytics benefits greatly from advanced capabilities in data management and in analytics. But at the end of the day, these are business management concepts, and they have to be executed extremely well and adroitly, in a competitive landscape. So there's no substitute for running business as well. As far as the R&D is concerned, those are genuine R&D resources, but they could be applied to a traditional business, or they could be applied to one of the new businesses. In general, we like the businesses to be self-sufficient for their technology needs. We do have substantial centralized resources that the businesses can draw on, and which are used to drive some central initiatives. But as much as possible, we're sort of trying to go for a very, very embedded technology and R&D development model, where the businesses really drive their own fate, and increasingly, the best of the businesses are now at the stage of looking very much like an internet company, where any senior manager has developers within their team immediately accessible, and the applications are built in a very modular API-linked fashion, and people are able to release code on a continuous basis. We're not there in every business by any means yet, but that's sort of where we're heading as a company. And so it is a very decentralized technology model in terms of delivery. Obviously, we have to have centralized and consistent standards for data governance, for information security, for architecture, for development protocols, and the technologies that we're actually using.
Very good. There are a few questions coming in with regard to the ecosystem. I think that we will cover next in the next part. Just one question maybe here, because it was mentioned, I think at least twice, is what was key to Ping An's decision to move to the cloud? And what were also challenges you saw when doing that, both on the customer and internal process side?
Well, it's certainly challenging. It's a 5-year process for a company of our size. I think for Peter Ma and the senior management that were there at that time, I think they could see very clearly that the traditional model of being sort of hostage to legacy hardware just wasn't going to serve the needs of the company over the long term. I'm sure it would have been cheaper in the short term to do nothing and stay where we were, but Peter decided to bite the bullet and to undertake a wholesale transformation. I think we did it in a pretty smart way. There were some cases where we could port applications, which means that we're not using cloud native architectures from the get-go. And once you port, you get onto the cloud, and then you can replace that application module by module with something that is more cloud native. So that process is in fact still ongoing. I'd say most of our platforms now are pretty close to cloud native. But yeah, it's a huge process, very complex, very expensive, takes a long time, and causes a lot of disruption for the businesses. So it's not something to be done lightly, but I think it's one of the most powerful things that Ping An has done over the last decade.
Absolutely, I think, and many European carriers are still struggling in that regard. So very impressive. So maybe then let's indeed move to the next deep dive, as a few questions came in here now also with regard to ecosystems, which is of course a bit of a buzzword now. But I wanted to introduce the topic again with our McKinsey view on as you could also call it, integrated network economy, how this will evolve and how big this can become in the next 5 years. And you see here essentially 12 ecosystems, how we classified them. And I think what is unique in these ecosystems is that they are built around customer needs and not around certain products or industries. When you think of mobility, for example, or health, many different industries come together to deliver an ecosystem here. And we also see, that we have different parties to participate in these. We have also different parties to orchestrate and run the ecosystem. Insurance companies are typically not the first movers in this space. Ping An is a bit of an exception, so we will talk about that in a minute. But these are often, coming from other parts of the economy. For example, in mobility, the OEMs are heavily investing into it. At the same time, also insurance companies are looking into it, because car insurance is still the most important value pool on average for an insurer. And they want to, of course, transform here, don't lose the customer interface when OEMs are now trying to build their own data offerings, their own insurance offerings. Even you see that some companies like Tesla announced that they would go heavily into the car insurance space. We see it from others, Daimler now building up an MGA model. So quite some activity there. And we estimate, I mean, here that by 2025, these ecosystems will have $60 trillion in global revenues. So they will really become relevant. They are already relevant today. And for an insurance company, I think not every ecosystem is equally important. Of course, the topics of mobility are very important. Housing related to home insurance, health, wealth protection, but also commercial services are the ones where we at least see the biggest potential for insurance. And let's hear again from Jonathan. I think this is one of the pictures that you might have seen in the past. Ping An is using it to illustrate a bit the idea of the ecosystem. I think Jonathan mentioned already in the previous part some of the new businesses that are built up. But yeah, it would be great, Jonathan, to hear from you how you think about the topic and also how you link it to the core business. Yeah, I mean, look, I guess that we've had, when I think of ecosystems, I think of, I guess, adjacencies to other businesses that one might have that can be built out, and where one business can in some way play off the other, and whether it's through capabilities. Leveraging of capabilities into a new business line that's sort of, it could even be unrelated but shares the same capabilities, or whether it's an adjacency for a customer value proposition. I think one of the interesting phenomena that we've seen in the last decade in particular is the way in which the new mobile-driven digital economy, mobile and cloud-driven digital economy, really has broken down the traditional definitions of many categories in our consumer lives. And for the obvious examples would be, when you bought a record or a CD in past decades, you went into a shop that basically just sold those things, or a book, or if you went to a movie, we had either you went to a movie theater or you went to a video store, even a decade ago. And obviously those things are largely of the past. They basically, for the most part, don't exist. Thankfully, we still have some bookshops around the place. But, and for a company like an Amazon or an Apple, for them to be in the music business, it's effortless because they have the consumer relationship and the interaction with the consumer, and are just very easily able to layer that into their value proposition. Of course, they still have to be very good at what they do. So, there are tons of people offering video streaming services, and the barriers to being in that business aren't very high. So if you're going to be successful, as Apple or Amazon, you still have to be, really, really good at what you do. And of course, there are roles for specialists in this new world as well. So, Netflix in that space would be a good example. But I think this idea of sort of the physical distribution channels that, in many ways defined categories and industries in the past, that those things breaking down create this new set of opportunities to find linkages that might have been more challenging in the past. I think that's an interesting vector. It's not like none of these things existed in the past. I mean, it's not, the idea that car manufacturers should get into financial services is not exactly a radical idea, because, auto credit, has been as important a source of profits for the auto industry for the last 30, 40 years as actually making cars have. So there's not, dealers all over the world make a very large percentage of their revenue from auto finance and from auto insurance. So there's actually nothing particularly new in all of this. It's just that with digital platforms, we just have ways of scaling these ideas and ways of integrating new combinations of products and embedding products in new ways that are just
that offer exponentially more possibilities than we've seen in the past. So in Ping An's case, I think the first thing is we're first and foremost a financial company, and we want to make sure that our customers have really access to all products and services. And I think we do a pretty good job of integrating our products and services, from insurance to banking to asset management, to, of course, within banking, credit cards, lending, personal wealth management, etc. So I think we offer a pretty comprehensive offering. And we certainly aim to be a financial ecosystem provider of choice for our customers. We've got an interesting platform in the auto space. It's not listed on this chart here, but we own a company called Educatoin, which is one of the very few acquisitions Ping An has done. And that is the largest online car sales platform in China. So we sell about roughly a third of new cars that get sold in China through that platform. It's certainly, amongst the largest online auto players in the world. It's a listed company in New York. We own just over half of it. But what's interesting is, we're also the largest car insurer. We're also the largest auto financier. And so what we're trying to do is figure out how to integrate those services in a way that is better for the consumer and better for the dealers. Autohome is basically a dealer lead gen model, like many of these online car platforms. And what we're trying to do is sort of find a way that makes it a winner for the dealer, for the customer, and for us. Not easy to balance all the interests, because if you preempt the insurance sale, for example, and if the dealer feels that you're taking away their revenue, well, they're not going to participate in your platform. So there's lots of things to balance. But I think we're finding our way through that and doing a reasonable job. We've also found that the data from the Autohome platform, in combination with other data that we have, is actually extremely valuable. So we actually have data as a service for OEMs and for other organizations that's quite significantly monetizable. So that's generating, I think Autohome generates about $1 billion of revenue a year, and about 10% of that at this point in time comes from pure data services. So that's an example. I'd say that, in the health side, we're a big insurer. So we, in life insurance, we carry a lot of health riders on our policies. We're also the largest health insurer, standalone in China. And we own the platform I described earlier called Good Doctor, which is a telemedicine platform. So it's a very natural extension of our health insurance offering. We've been really exploring different models in health. And so we have a very interesting model for trying to sort of build a hospital network of our own. We've actually made an acquisition just recently to buy the Peking University Hospital Network. So there's about, I think it's 11 hospitals we have that are top tier hospitals in China. So one of the vectors we're going into is it possible to, as a payer, to sort of vertically integrate hospital services into what we do. The Good Doctor platform allows us to basically provide online health consultation to anybody, anywhere. So that's extremely important for our own customer base. And we have quite a range of other health services. One of them is quite interesting as well. So pretty much everybody in China is insured by the state health insurance system. And we have a kind of a model where we work for municipalities that run these health liabilities for the state and health insurance system. And we help them sort of actuarially evaluate the risks that they're carrying. And we help them to create kind of long-term value solutions that, let's say, for reducing incidence of chronic diseases, for example, or assessing the efficacy of treatments within hospital, all the way through to eliminating wastage and eliminating outright fraud. So it's quite a range of businesses, and they all play off of a similar theme around health, around the use of data, and they all have ways of reinforcing each other that are quite interesting. So there are a couple of examples. Within our broader, we've got 600 million plus internet users within the company across all our different platforms. and we have about 200 million financial customers, and we're growing customers typically about 25 million a year at the moment on the financial side. And one index of how this kind of network of activities is contributing to the company is about 35% of our new customer growth is coming from the kind of internet ecosystem for the financial businesses.
Very impressive indeed. I think that is really a nice example of connecting all these businesses. And also, I think it was nice to hear concrete examples like with Doctor and Auto Home. I think there were some questions related to these examples. So if you could go a bit deeper. So I think those you answered nicely. I think there's one question also here. Can data be shared between the different businesses? Which is, of course, an interesting question, especially from a European perspective, where it might be a bit more difficult, but maybe you can comment on that.
Yeah, well, I guess that folks would have been aware of some of the regulatory developments in China, and in particular the regulator's stance with respect to the online ride-hailing or sharing platform Didi, which listed in the US relatively recently. The concern that the regulators in China have expressed is that particular company, in their opinion, may present a risk with respect to personal data security. So without commenting on Didi's situation, but I think it's very clear from that data security and, well, data sovereignty, number one, data security, number two, but also the privacy of individuals' data is of growing concern for Chinese regulators. I think there's probably been a fair bit of misunderstanding internationally with respect to sort of the way data is used and shared in China. I'm very sure that if you go back 6, 7, 8 years, you could have characterized it as a pretty liberal environment. And that's probably not because there weren't guidelines and laws. It's probably because those laws were either not understood on the one side and or not enforced on the other. But I think for recent years, there's no doubt that certainly the big listed companies that you would know about, obviously including companies like Ping An, take data security extremely seriously. I think if you're in the regulated financial or health sectors, it's at an entirely different level of focus. So in reality, it's actually quite similar to the European environment. We certainly can't take data from Ping An Bank and give it to Ping An Life or vice versa, or from Ping An Health. We certainly can't take Good Doctor data and give it to Ping An Health. That's totally illegal and unacceptable. So what we've been working on is models that very much replicate the kind of thing that someone like a Google or a Facebook might do, which is to be able to take profile data and aggregate that anonymously using kind of customer identifier keys, and then being able to then enrich the profile of a customer within any individual entity with like a profile data that is non-specific relating to that customer. And in that way, we're not sharing specific details or compromising specific information with respect to customers. We're doing, if you go online and you look up hotels, and then the next time you open your online newspaper, you see an ad placed by Google AdSense that invites you to click on something to do with the Hilton Hotel. Well, what's happened is that Google has a profile of you, and they've decided to place an ad in this particular publisher, and they've got an advertiser, and they're able to use that profile without disclosing your specific information either to the advertiser or to the publisher. And that's sort of exactly the kind of model that we're operating internally to be able to be helpful to customers, to be able to anticipate needs, customize offerings, and so forth without actually compromising individuals' data and data rights. So I'd characterize it today as a pretty sophisticated and pretty strict data compliance environment.
Yeah, that makes sense. I mean, that also answers a few of the other questions here about customer data rights and how you use the data. No, thanks for that. I think it also links a bit to the next chapter we wanted to cover here, data-driven value creation. I think we covered it already in some regards, but just to give you a bit the helicopter view again, I think overall, when you look into the insurance industry now in a more narrower sense, so really the P&C life business, health business, and the application of data and analytics, we see lots of room for growth, especially in Europe. And I think when you look into the key levers, we see it on the productivity side. We just listed here a few examples in operational efficiency, but also in enhancing existing products and services, and also developing new products, disrupting business models. So I think this is really just at the beginning. Many of the underwriting models are still very basic, using basic regressions, not sophisticated machine learning models, but you have it essentially along the entire insurance value chain. So when you look into claims handling, into fraud assessment, into servicing, the application of data has not been to the maximum extent yet. I think there's much more possible. We see it also on the premium side. So when running now a few use cases, for example, on lead generation, cross-selling, I mean, it might sound a bit outdated, the topic, because it has been or it's being discussed for years. But at the same time, I mean, when we do today use cases in that field and leverage all the data that is available, leverage external data, we can see uplifts of conversion rates of 10 times, 20 times. So there's massive potential still. Personalization is another topic along the traditional insurance value chain. If you just take some of the figures here that we have here, which are based on real life examples, and you really focus on injecting data into the insurance business model, it's certainly possible to achieve a step change in operating profit. So a few percentage points additional margin, which means in some businesses like motor business, factor 2 or factor 3 in profit is possible. We see it. I mean, the big levers are often untouched in sales and claims. A lot of focus has been on products and pricing, but less on the others. So it's really just at the beginning. We also see that technologies are advancing. So the way analytics can be applied is becoming easier. There are more use cases readily available, which can be implemented very easily. Also, I mean, from our perspective, when we had insurance companies develop a use case, for example, in fraud or in lead generation, I mean, a few years ago, this was a multi-month project. Today, it's basically a few weeks because a lot of the things are readily available in the market, and the impact can be quite massive. But I mean, it sounds promising, but there are also many challenges with regard to data that we see. And just to mention here a few, I mean, we discussed already data security, data regulation in the past part. I think that is certainly one part, but then you have also lots of challenges with regard to the technology and data landscape. So the data is fragmented, the data quality is variable. So in our projects, we spend probably 80% of the time to consolidate data, to enhance the quality, to connect data before we start analyzing, interpreting, and optimizing. So that part is then quite quickly. There is not a good data culture. I mean, data is collected in all parts of the insurance organization, not really connected. Often it's not even collected. So you can still get an insurance policy with many carriers without leaving your mobile phone number, without leaving your email address. So that is not possible in other industries anymore. So this whole data culture is also a topic, I would say, that has lots of room for improvement. And then there is, of course, also a talent gap. I mean, when you look into the top employers of data scientists, of people coming from universities with a lot of knowledge in the space, they typically don't see insurance companies as the #1 employer. So actually, insurance is one of the least attractive employers for them. So there needs to be also a shift to improve skills and capabilities in this space. So lots of opportunity, but also not so easy to capture. And here again, Jonathan, would be great to hear a bit from you how you. I mean, you mentioned already how you work with data, but I mean, how you overcame some of the challenges we mentioned here beyond regulation. But yeah, when it comes to data culture, for example, or recruiting the talent, how Ping An is managing that.
Thank you, Simon. Well, I think I mean, our premise as a company is that, the value of most of what will represent our future comes from being able to create value from data. And that means being able to access data, gather data, to structure data and make sure it's coherent. And that is what we think it is. And then be able to kind of make inferences for that data, but to make those inferences in ways that, drive use cases that create value, that either allow us to take, everything else being equal, being able to reduce risk, to do things at a lower cost in a more suitable and focused way for customers, or to improve our margins. That's it's really at sort of the most fundamental level. This question sort of goes to the heart of everything that we're trying to do as a company. And I think if we look across our company, we just see an almost infinite number of potential use cases for applying data science to what it is we do. So I think that talent is critical to that. So we have a lot of data scientists. But having said that, so I think we have about 2,000 data scientists. So let's define a data scientist, someone at least with a master's degree level of qualification and who is, quite competent to build AI and machine learning models. So it's a lot of bodies, but we're a very big business as well. And it's one thing to have the resources. It's another thing to have the understanding across the organization as to what these resources actually can do, and then the kind of openness and adaptability to be able to be creative in how to apply those resources, because it does require frequently a very different way of thinking about your business. And I think we do that well in some places. I think we've got work to do in other places, as would be the case in any organization. I'd say overall Ping An is in a pretty good place, but definitely we will continue to improve and can. As far as examples, and I've given some already, but one of the early ones that we did was producing credit scores and fraud scores for our lending businesses, and then we found that those were pretty reliable, and we found that they were actually quite valuable to other lenders who were interested in accessing our scores. And by actually using a broader set of data to generate those scores, we found that there was actually pretty good incremental value as well. In other words, to see credit records and credit behavior from a whole bunch of customers that aren't ours. So we found that the process of sort of broadening the net was actually additive, and that so it improved the performance of the models, and at the same time created a business. So that was kind of serendipitous for us. I'd say that in some of our work has been capabilities led. So as I mentioned, we sort of initially got into visual AI, trying to do facial recognition, and from there we've been able to use exactly the same people and the same skills to do the auto claims piece that I described. We've been able to apply the same technology to various medical imaging applications. It's now possible to use algorithms to read X-rays, CT scans, and things like that, at least as accurately as humans can do. And I don't think these technologies are a substitute for radiologists at this point, but they're certainly an enhancement and a workflow enabler for radiologists and their assistants. So we've been able to apply that there. The whole area of natural language has been very important. So we've developed strong natural language capabilities. That's helpful for tools. We've got, for example, one of the enablers for our online medical consultation business, Good Doctor, is a medical database called Ask Bob. So it's basically an interactive database using natural language processing that allows you to ask pretty much any kind of health question, either as a practitioner or as an end user, as a patient, and get a coherent answer. So building that type of engine has been a pretty important thing for us. We do a lot of work with call centers and voice robots. So we started out by taking all the inbound calls that we get. We get about 1 million. We used to get about 1 million voice calls a day. And we've been able to very significantly reduce the number of, the first thing we do is record all those calls and then transfer them from voice to text, and then use that kind of text record of the conversations to train models on what to do and what not to do when responding to customers or when reaching out to customers. So we do both. We use voice robots combined with natural language processing, both to handle inbound and outbound queries, or even sales in simple situations. And we're finding those to be quite successful and quite productive. Of course, it's the simpler conversations where that's relevant at this point in time. And the technologies and capabilities are quite complicated to put all that together. Like if you're going to do outbound calling, you have no idea where the customer is. So they could be at a train station or in the street. So you're going to have a lot of background noise. So you have to have some pretty sophisticated algorithms to figure out what is the customer's voice versus what's some other noise going on. You also have to, in a place like China, probably like everywhere in the world, you have to be able to deal with regional accents and match those and understand them, but also match them with a voice that sounds very similar that the customer themselves can understand easily. So stuff like that. So I think we really do have a lot of use cases that we're working on at any point in time. And not everything works the way we want it to, but I'd say on balance, it really is an important driver for our business.
Very impressive, very impressive. I think a lot that many European carriers can learn from. Very good. I think in the interest of time, unfortunately, we can't answer every question. We have, I think, 3 minutes left. I would try to use the last part also a bit as a summary when thinking again of incumbents' challenges and end here a bit positive and not only talk about challenges. I think we discussed many challenges in the past hour. But actually, I think there is also a big opportunity out there. I would rather see it as an opportunity. We saw in the beginning that the momentum is very positive. A lot of things are improving. There is room for growth. There is a lot of room for applying data. There are the ecosystems out there emerging. We see from Ping An how all this can come nicely together. And we see also actually that incumbents especially have many strengths. So it's not only about challenges. When you think of insurance innovation, there are big strengths, for example, when it comes to the brand, which is still very important in insurance. We saw that many of the new innovative models really struggle to build trust with the customer because they have unknown brands. And many insurance brands are out there for more than 100 years and are well known. They have a customer base. So incumbents have millions of customers often, a loyal customer base, very sticky, low churn, which is a very nice model, a very nice base of data, a very nice base to cross-sell. So that is a big advantage because customer acquisition is typically one of the key challenges of B2C innovators. Then there's a lot of knowledge around technical excellence, and there is a lot of data in the system. Just, I think, the application and using data analytics to create more value out of data, as we just heard, is not yet done sufficiently, but the basis is quite good, and there's a lot of investment power. I mean, fortunately, the insurance industry, I think, did not suffer too badly during COVID. There are many actually parts of insurance, like motor insurance, that could even benefit. And even before, there was a lot of investment power. So investing billions into innovation is possible. So that's a nice starting point. At the same time, I mean, we see that innovators bring much more simplicity often. They don't have legacies. We see that the experience is often very digital first, so really coming from the customer, from digital experiences, less from an internal focus. Data analytics, we discussed, is a big field, and I think what is also lacking in, which is a challenge and at the same time an advantage of innovators, is that there is a new and agile culture to try out things very fast, as Jonathan just mentioned also in Ping An, test and learn, which incumbents still need to learn in many cases. So we believe, I think, and that's a bit the headline here, a new industry model requires real collaboration between established models, new models, and this is really just at the beginning. Maybe, Jonathan, the last question to you. I mean, you kind of combine both perspectives here. No, you have the advantages of a big incumbent with hundreds of millions of customers, actually. At the same time, you are quite innovative and are agile, leverage data, all these things. Do you also have challenges?
Of course, we have challenges, and you know, we have marketplace challenges, we have competitive challenges, we have regulatory challenges, we have all kinds of investor challenges. we have every challenge under the sun, like everybody running a sizable business anywhere in the world. Look, I think your question on the incumbents, it's a really fundamental question, and my view, at least, based on you know, observations over the last couple of decades, is this sort of digital transformation has taken hold across many different industries, is that in financial services, I think the incumbents really do have a major advantage. And you know, I'm always amazed that when you look at the financial industry, I'm not aware of one single company that has gone bankrupt because of digital competition. You know, plenty of blockbusters and newspapers that don't exist anymore, of companies in all kinds of different industries that simply don't exist anymore. Kodak that simply got outcompeted by a new digital model and just simply became irrelevant and ceased to exist. That, interestingly, hasn't happened in financial services. And it's not because financial services companies are ahead of the play. In many cases, quite the contrary. But I think it's almost certainly because of the regulatory moats that exist in many areas of financial services, the access to capital that's critical in our industry, and funding, which is just not trivial. And I think that you know, you have a set of customer expectations around finance that make client relationships generally pretty sticky, and that's an enormous advantage. It's an advantage that you know, the financial industry has a choice as to whether to simply benefit and exploit that you know, to allow that advantage to drop to the bottom line and allow competition to evolve as it will over time, or I think it's an advantage you can actually take and you know, use your strength to sort of bridge you from, you know, being who you are to being who you want to be, and that, I think, takes more courage and more foresight and more planning and more willingness to actually make substantial commitments that are transformative for your business. And I you know, the way I look at it is we're going to see a world of haves and have-nots amongst the big legacy financial institutions. There's going to be a relatively small number that are able to grasp these opportunities and find ways of becoming cloud native in an accelerated way, find ways of adopting kind of DevOps type of operating models, such as I was trying to describe earlier, find ways of using analytics in really powerful ways to drive client experience and client engagement. You know, realize that the mobile revolution has happened, and if you're not a mobile experience, you're probably not going to be an experience at some point. And thinking of, your other channels almost certainly have relevance and salience, but that salience will diminish over time. And, I hear a lot of financial companies still talk about multi-channel. I think multi-channel is a cop-out. I think that, the world has moved to mobile, and the other channels all have to be subservient. And by all means, when they're useful, you use them, but use them via the mobile platform. So I think there'll be a small group of companies that get some of these ideas. I mean, there may be different views as to, what the relative emphasis needs to be and how they be implemented. And, the marketplace will tell us which of those are successful or not. And I think there'll be a pretty large number of legacy financial institutions that just become increasingly less relevant and less competitive and less viable. And those guys will indeed eventually disappear or be consolidated, probably more likely. So I think that's the interesting choice that incumbents have today. But it really is their game to lose.
Okay, so I think we're at the end of this session, and I would like to join me in thanking Jonathan and Simon for these fascinating insights that we got out of this discussion. It was really exciting to listen to you guys, and thanks again for being here. I know that Simon has a meeting now, so it's completely fine to jump out. I think Roger and I will have a few remaining remarks, just a few seconds about Thursday session, but thanks again for being here. And obviously, you have to rush to your meeting. All the best for the rest of the week, and I hope to see you guys again soon.
Thanks, guys. Thanks, Simon. Thanks, Roger. Yep.
So with regard to final remarks, what I wanted to say is that the first Thursday session will commence actually this Thursday from 5 to 6 Central European time. So that's important, as we have a lot of participants from other time zones. You should be getting a link or already have the link from our support team, and should be able to dial in. And Christoph, my colleague here at the Institute, will be running the session on Thursday and make sure that we get the discussion going. Other than that, I can only thank everyone for joining us for this kickoff. I really enjoyed the whole session. I think it was a great start. And maybe Roger, if you have some remaining words to share with the participants. I think you're still on mute. I can't hear you. Hold on a second. Yeah, I think you need to unmute yourself.
Okay, then I do that. Thank you.
Yeah, now it works. Perfect.
Now, basically, I just wanted to thank everyone for participating and making this first session, quite successful. And looking forward to the next sessions. And hope for a good participation also coming Thursday.
Perfect. Maybe just one last remark, because I was just eyeballing the chat. So Roger and I will work with Jonathan and Simon and their teams to make sure that we get you the answers to the remaining questions. So in a live session, this is what can happen. We had a lot of activity in the chat, which is great. And we would like to encourage you to continue doing that. And on our side, we will make sure that we get you the answers to the questions that we're not possible to answer live in the live stream. So
at least we'll give it a try.
Exactly.
Okay.
Perfect. All right. Thank you very much. And see you next week.
Bye-bye.
Bye. Thanks.